Hello and welcome to Policy Watch, your weekly snapshot of the biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. The government this week submitted the list of people believed to be holding undisclosed bank accounts abroad. The Supreme Court was given the names in a sealed cover and the centre received these names from different countries under various double taxation avoidance agreements. A day after the Supreme Court pulled up the government for revealing just 3 black money account holders, the government submitted a list of reportedly 627 names. The Supreme Court at that point, however, refused to open the sealed envelopes and instead asked the special investigation team to verify the names and involve a procedure to investigate them. Attorney General Mukul Rohatgi said the list related to the year 2006. The data was reportedly stolen from the HSBC Bank in Geneva. The French government gave it to the central government in 2011, and the government admitted that a few people on the list accepted ownership of these accounts and paid their taxes since then. Politically, black money is a hot button issue in India. Various figures running into billions of rupees have been circulating in the media, but so far no government committees have a quantified amount. During the hearing, the government also agreed to discuss grievances about potential breach of confidentiality clauses imposed by double taxation avoidance agreements.
The government of India gave the entire list of HSBC accounts. There are about 627 or 628 accounts. We gave it in a sealed cover to the court. A status report was also given in the sealed cover to the court. The court thereafter heard our submissions as to what we are doing under the control of SIT, how much investigation has been done, has all been indicated in the sealed cover. It was also indicated to the court that the last date for assessment of all these accounts is 31st of March 2015.
Well, joining me now to discuss this is Madan, Sabnavis, Chief Economist of CARE Ratings. Madan, thank you very much for joining us. Right, so the issue of black money is a very vexing one, right? But let's ask a very fundamental question here. Why is it that this country, which is a poor country by most standards, throws up so much of it?
No, I think it's largely because of, I would say, 2 reasons why we have a large black economy. The first part is that there are large amount of transactions which take place in cash.
Right.
So the cash economy is very large. And the second part is in terms of regulation, which means your entire tax system. So I think that's something which gives you an incentive to not pay tax, so that gets counted as black money. So essentially because of a large unorganized segment which leads to a lot of cash which is circulating in the economy, as well as certain regulation on the government front where we make laws a bit too stringent, not just in terms of tax rates being high, but also in terms of the processes being very long, that it gives scope for black money being generated.
Right. So now that we seem to be committed to fix the problem, where should we be fixing it first? In the external front or the internal front, and which in your mind is more important?
No, to my mind, I think the internal front is more important, because when you're talking of external, I think we're going into a totally different area where there are different countries which are involved. So it depends upon what kind of agreements we have. And even today, I think whatever we've read in the press about naming of certain persons, everybody probably has a justification for saying that he or she has not done anything wrong. So I think that's something which is very extraneous to the system. So I think we should be looking internally, and more than the cash part, I think it's probably the tax and the regulatory part which we need to address.
Okay. And if we were to start addressing it, where should we begin?
So to begin with, I think we need to look at our tax structure, because I think that's the starting point of creation of black money. So when we're talking of DTC, we're talking of GST. I think these are probably 2 moves in the right direction. But that itself will make sure that a lot of loopholes which are there in the system, as well as the vexations which are there in terms of indirect taxes, would actually sort of be minimized.
So you're saying the vexations lead to avoidance, or is it the sheer incidence? I mean, the amount of tax?
It's a combination of both of them. See, the thing is, if I have to pay a very high amount of tax, then I tend to try and dodge it if it's possible. The second part is in terms of the processes which are involved. So I think that's what the government seems to be very keen to make sure that there's less interface between human beings, so that I can do everything online. I think that's the whole idea, that I make things simpler so that people comply with in an easier manner.
From an administrative point of view, have we understood our ability or our propensity to pay tax, and are we reacting appropriately to it from just by learning or taking away the lessons of the last few years?
No, I think this is one part of it which we're talking of when we're talking of the tax system and the administrative issues. See, the other thing, like let's talk about something like GAR, which we had earlier. Now, the way in which money really round trips and comes into the economy, I think when the earlier government tried to do something about it, I think all of us took umbrage at it and all of us felt that the FIs will stop flowing, so therefore let's keep guard in abeyance. But I think we also need to know, to be very clear on the policy front, whether are we really so desperate to get in foreign funds that I don't want to sort of plug the loopholes which are there, because plugging in the loopholes may necessarily mean antagonizing certain flow of funds, and I need those dollars very much. I think that was a case which we had a couple of years back. So therefore, we need to be very clear about on the policy stance as to how we are really looking at these issues.
Okay, and what about the internal front, right? There's so much cash being thrown up, including in real estate, and yet we all know about it. Real estate transactions are registered, and yet we don't have either the ability or the desire to.
No, I think I don't think it's a case of desire, it's a case of ability, because we're looking at the cash economy. In fact, if we sort of try and sort of link this with what RBI calls lending to sensitive sectors, which is basically the capital market, commodity markets, and real estate. I think these are the three segments which generate the maximum amount of black money, primarily because they're conducted in cash. And to this, I would also add gold, because of late when we've had restrictions on gold, then automatically I think the idea is let's try and game the system, let's try and move out of the formal channels, because it's illegal to bring in gold. Therefore, I go into something like smuggling, and where the transactions have to take place in cash. But if I'm talking of the other segments, to my mind, it's very difficult for one to really control it, because let's look at real estate, for example. I think sometime back there were some reports saying that the amount of bribes which you have to give in order to go ahead with your project was, somebody had estimated as 50% of the construction cost, which means there's a large amount of money which you're paying in cash. So automatically you're going to realize it also from the purchasers. And the fact that we have a large number of taxes that are being levied. You have a stamp duty at the state level. The stamp duty rates varies across various states. So I think that gives you kind of an incentive to understate the transaction, pay less in the form of check, pay more in the form of cash. Right. So I don't think there's a very easy, because now it's gone into our psyche that we don't want to pay this kind of high amount of taxes. I don't mind paying a large amount for my flat which I'm buying, but I don't want to pay the tax. So therefore, let me understate the cost of the property.
So you're saying the psyche is also an important part.
The psyche is also very important. Yeah. And similarly, if you're looking at, say, let's look at a capital market and a commodity markets. Now, the government has done a lot to make sure that everything goes online. But then dabba trading goes on in the stock market and goes on in the commodity markets, because there are too many restrictions which are there if I want to really come and start trading online. Right. Because the exchanges have certain kind of restrictions. Let me go to a system which doesn't have these business of margins, open limit, your position limits. So let me try and deal in cash outside the system. And these systems work very well because nobody really breaks contracts out there. So it's a fairly efficient system. Everything is conducted in cash, and therefore, I mean,
everyone is happy.
Everybody is happy except the government.
So what are the lessons that we can take from other countries? I mean, many countries have been through this cycle, I'm assuming. Right. So how can we?
No, I think as long as we have a very unorganized segment in the economy which is flourishing. So if approximately, if I have to say, I would say around 40 to 45% of our GDP is actually in the unorganized sector. You take agriculture, you look at services, you look at a large part of manufacturing. The moment you go into the unorganized segment, it's very difficult for one to track. So people are not used to paying any kind of taxes. People have problems in terms of paying bribes. So you want to recover the whole thing by understating your production levels, your sales numbers, so that you're able to pay lower taxes.
Okay, so what are the lessons? I'm saying, suppose we want to look at other countries and say, okay, here is how they fix this, or at least try to fix it.
No, I think, Govind, we can fix certain amount of things which are within the regulatory and the tax scope. But what's going on in the cash market, like, can I really cut down on bribes unless I improve my administrative processes and ensure that people don't have to pay bribes? Only then can I cut down. But then, as I told you, our psyche is already in such a direction that I don't want to pay taxes, so therefore I continue paying in cash, and therefore that's not going to change.
What's this costing us?
See, in terms of costing us, I would say that
because at one level it appears that it doesn't cost us at all, except that there is a notional loss of tax.
No, there is a large amount of loss of tax. There's a large amount of income which is being generated which we're not aware of. So if I talk of our growth rates, our GDP numbers, they're also being understated. And more important is
but as economists, everyone seems to account for it somehow, somewhere. Isn't it?
No, the black money part doesn't really get accounted for, because I make certain kind of imputations for things which I'm aware of, which exist. But if I'm talking of how much of dabba trading takes place on the stock market, or if I'm talking
I'm saying overall economic output.
No, overall economic output, a large amount of it does not really match up. So I think that's where we're going to have a problem. And the fact that this amount keeps increasing over time, it means there's a large amount of deterioration in our overall system of morals, or whatever we like to call it, which means that we're only going to go downhill if we don't check it right now.
Okay. So carrot or stick?
No, I think it has to be a combination of both, because we have seen that when you have stick all the time, it may not really work, because I think we have lots of ways of gaming the system, and I think Indians are very good in gaming any system that we create. So I don't think it's going to be stick. It'll have to be more a case of having a more rational system of taxation, a rational administrative system, whereby I cut down on human interface. I think that would be the starting point which the government can do.
But
because in terms of cash transactions, I don't think the government can really cut down. There was some suggestion made that you demonetize high denomination notes, but then it will shift to the small denomination notes, because somebody who's dealing with 1,000 rupee notes can also deal with 10 rupee notes or 100 rupee notes. So I don't think that's going to be a kind of a solution for it. It's more a case of having a more tax-friendly environment, a more regulatory friendly environment. I think that should be the starting point where the government works on, and I'm sure that there will be progress made over a period of time. But this is not an issue which we can sort out in the short run.
And do you think that the government can also play a role, I mean, not that it's not tried before, and it is doing so even now, in actually educating people to pay more tax and convert more black into white?
No, actually, there are two parts there. The thing is that if I'm not paying tax, is it a case of saying I'm deliberately not paying it, or I'm not aware of it? So if I'm not aware of it, like lots of people are not aware of the fact that the interest you get on savings account is actually taxable. Everybody assumes that it's only your fixed deposit interest which you have to pay. That is a case of education, I think. But I think most of the time we know that we have to pay tax, but I know that we are talking of, again, two types. One is because of the complicated tax laws which lots of companies have, the lots of allowances which are able to claim. So that is one way in which you game the system and make sure you pay less tax, but that would be a legitimate way. Because if the tax laws allow you to do certain things, you make use of it. The second part is that the tax laws don't permit it, but I'd still go ahead and do it because I know I cannot be caught, or the cost of paying it is much higher than the probability of being caught.
Right.
So therefore,
and so far when we've been talking about black money, we are really talking about people who are avoiding tax. I mean, money which is somewhat legitimate but is not being accounted for, at least in the tax balance sheet.
Right.
We are not talking about illegally.
We're not talking of smuggling which goes on, which is which is a totally different economy.
And some of the accounts, the Swiss bank accounts, are really illegal wealth or illegally attained wealth.
No, one again doesn't know what's the genesis of this kind of wealth. So when we're talking of saying that there are so many Swiss bank accounts which has so much of money, now this money might have been accruing over the years, where we don't know what the laws were at that point of time, whether it was permitted or not permitted, whether people in India were aware of it or not aware of it. Because I think what I've read in the newspapers which talk about the revelations, almost everybody has a fine justification for saying that nothing wrong was really done. Now, if that's the case, we're not really sure about what kind of money is really lying in those accounts and how it really accrued, and whether it was legal in terms of the kind of tax agreements we had with the Swiss government.
So that's really the last question, Madan. So as we go forward, right, we are in a global world. At one level, we are globalizing further. We are allowing our own citizens to transfer more assets or monies abroad. On the other hand, there are concerns about money flows, not just in India, but even in the United States, right, which is cracking down on taxes evaded within the country by their own citizens. So what is the way, I mean, where is all this headed in your mind, and what should we be thinking of?
See, where we're headed for, actually, honestly, I don't know, because we have been talking about it for so many years. We've had so many committees being set up. There are certain measures which have been taken by the government, including trying to sort of saying that, okay, I'm having certain bonds to be issued, one-time amnesty kind of schemes which have been brought in. But it creates a kind of a moral hazard. We've seen that everybody waits for the next scheme to come in. And also there is always a fear of saying that if I reveal myself today, I could be hounded by the tax authorities tomorrow. So might as well keep quiet since nobody anyway knows about it. So I'm not quite sure where we're headed, but I think this is a very, very tricky issue, which I think can start from the government, as I mentioned earlier, by saying that let's have a more friendly environment in terms of the regulation, because I think it's going to be more of a case of carrot rather than stick, which is going to lead to any kind of change in our psyche and overall in terms of...
So merge the carrot and the stick, but be friendly so as to convince people to pay taxes or to not generate black money and therefore be part of the system.
Yeah, absolutely, because I would say that all kinds of threats which have been given in the last 20-30 years hasn't really worked, and there's no reason for us to believe that things are going to work now, and people are going to react differently to any kind of stick which is hanging in front of us.
Right, Madan, we've run out of time. Thank you very much for joining us. We take a break now, but we'll come back on the other side and talk about the FTIL NSEL merger by the Government of India. Stay with us. Welcome back to Policy Watch. In a major intervention, the government ordered the merger of fraud hit NSEL with its holding company FTIL. The decision comes a year after the payment scam broke out at Jignesha promoted NSEL in July 2013. In a statement, the government said the decision was taken in public interest under Section 396 of the Companies Act, as the exchange is not left with any viable, sustainable business, while FTIL has necessary resources to facilitate speedy recovery of dues. Now, the NSEL was involved in a payment crisis of rupees 5,500 crore and more. The move will finally take shape after receiving submissions and objections from creditors and stakeholders of both companies. This is the first intervention by the government after the Satyam scam in 2009 of this nature, in which the company was sold to a third party under a government supervised auction. NSEL was set up as an electronic exchange for spot trading in agriculture and food commodities by the Jignesha promoted FT Group. Financial Technologies is the holding company, which had also set up commodity bourse MCX and MCSX among other ventures. Joining me now to discuss this is Deena Mehta, Managing Director of Asit Mehta and also former President of the Bombay Stock Exchange. Deena Ben, thank you very much for joining us. So a larger question first, what is the role of exchanges and so many exchanges in a market like this?
See, exchange role is very simple, that the household savings which are there, they need to get into various kind of investment assets, be it financial assets or commodity assets or real estate assets. This is what an exchange should do. Like for example, earlier we had only equities, which was channelizing the household savings into industry. Then we have ETFs, gold ETFs and others, so it is going into commodity. Now we are talking about listing of REITs, so it will go into real estate. So exchange is a mechanism which is a go between the a retail person or a saver, I would say, to put it very specifically, between a saver and the asset is offered in such a manner that smallest of investment can go into a particular asset if you want to invest in that asset.
And that's where we started from.
Correct.
Now, along the way, we had exchanges like the Bombay Stock Exchange, the National Stock Exchange, which in some ways were either government monitored actively or controlled. Now, we then went into private exchanges where the problem seems to have begun.
Actually, if you look at it nowadays, all exchanges are private exchange because they have kind of demutualized the exchange, and those exchanges who are very low on volume, who have not demutualized, SEBI is asking all these exchanges to exit the market. So I would say that no more is exchange a public utility service as it used to, we used to perceive it to be at some point in time. Today, exchanges are privately owned, they are for a for-profit motive, and I would, though they operate within the regulatory environment of SEBI and and RBI to a lesser extent indirectly, because the FIIs would be controlled by RBI. So essentially they are regulated entities, but they are for-profit entities.
Right. So if we were to now pick up the lessons that we've learned from the whole FTIL episode, what would the key ones be?
See, the one very important lesson that we have learned is that first thing is that the exchange per se, everybody has suddenly disowned the working of the exchange. The exchange was permitted to do business by the Consumer Affairs Ministry. It was granted certain exemptions. There was a very clear perception that FMC is managing, though after the scam FMC comes and says no, it was never under our management.
It comes under the state governments.
Yeah, under the state governments. Yeah. So the first important thing is, even MCX exchange, I would say, forget spot where we are, so even MCX exchange, the entire regulatory framework so far as commodity exchange is concerned, I would say on a scale of 1 to 10, if security market is at 9, this would be at 2.
Okay.
So much gap is there in the regulatory framework. There is nothing.
So you're saying, first of all, don't confuse equity-backed stock exchanges like NSE and BSE with the FTIL.
Exactly.
And
we
so on,
cannot confuse.
NSE,
and second thing is that government needs to put legal framework in place before allowing the exchanges to function, which applies not only to spot exchange but even commodity exchanges, where the regulatory framework is even missing today, and they hope to put it in place. Simple thing like broker regulation. I mean, there is nothing like broker regulation so far as commodity exchanges go.
So are you saying therefore that the problem only is with commodity exchange and their environment rather than the markets as a whole?
Yes, 100%.
Okay.
The legal framework which is there,
but the brokers are similar.
No,
I mean, the same brokers are playing in both
are similar.
markets.
In fact, because the brokers are similar, to a very large extent, the practices which are followed in the equity markets are also followed over there. Like there was no KYC regulation in commodity market, but since we had KYC regulation in equity market, when a commodity customer came, we did the KYC.
Right.
So in fact, we just extended the good practices of equity markets to those markets, and that is why what happened was that we had lot of faith and sanctity in the trade guarantee fund. And when there was a trade guarantee fund over in NSEL, people felt safe. Otherwise, had there not been a trade guarantee fund, we would never have done business.
Okay.
Since we have taken trade guarantee fund and the sanctity of it for granted, this is something which was a big blow to the confidence of the brokers as well as the investors in the commodity market.
Okay, so you're saying structurally it was still okay, but except for maybe fraud or alleged fraud that happened.
Correct.
Okay, now the government is saying that it wants the FTIL, that's financial technologies, to merge with NSEL, which is the company in question. How does that change things, and what can this take it forward
one thing is that the fact remains that FT was in the business of setting up exchanges and managing. It had almost 10 to 12 exchanges under its belt. It had Singapore exchange, it had Mauritius and Dubai and so many exchanges. So firstly, it was in the business of managing the exchanges. So if anything were to go wrong in those exchanges, and the FTIL owning 99.99% of the shares of that exchange, it is fully responsible for the affairs of that exchange. And like if you say you are in cement business, so anything the government does or anything happens to cement business, that company is going to be affected by it. So similarly, if you are in business of running exchanges, and if the exchanges go under, you have to take responsibility of that. And what is more important, I am very happy with the government step, is that if you look at the scams which have happened in this country, be it 1992 scam or 2001 scam, this scam is much bigger than those scams. We set up a JPC when those scams happened. Here nothing was done. Mayaram committee, one report came which was not acted upon. All these suggestions are given in the Mayaram committee report, they are not acted upon. So that complete silence on part of the government, complete inaction on part of the government.
So you're saying so are you saying that the attempt to merge it or supersede the board that's not enough?
No, it is enough.
It's too late,
No, it is too late. That is of course there, but it is one of the steps. See, ultimately money is to be recovered from the processors, people who have cheated the system. It's all right if you put Jignesh Shah, he is ultimately buck steps on his table, but what about all those processors? They are the ones who have taken the money, who have put it in their businesses, who have put it in real estate. They also need to be punished. We can't let them go scot free.
Okay.
So these moves are good enough, but at the same time, that last leg mile connectivity of actually recovering the money from the people, that also needs to be completed.
So assuming that's a case of fraud, like any other fraud, what is the fundamental problem that we should be trying to address here? Is it the reform of an exchange or the correction of a financial system?
Everything needs to be done. First is, whenever there is a scam in the system, first thing to do is get the money. Okay, so in fact they grossly messed up when the Harshad Mehta scam happened by appointing that custodian who took 10 years to recover the money, which was according to me quite ridiculous. Same thing, it was little better when Ketan Parekh scam happened, when the assets were seized far quicker than what happened in Harshad Mehta scam. So in any scam, first thing is you have to lay your hands on the asset. Otherwise asset will go away, they will get withered or whatever. So that is very important. Second thing, this throws up a very huge weakness in the commodity markets where the legal framework is absent. So you need to put the legal framework in place for the entire commodity market, not just the spot market, even in derivative market. According to me, derivative market also need lot of regulation. So that is the second part of it. And third part of it is restoring the integrity of the trade guarantee fund, because trade guarantee fund is the core and the heart and the soul of all the markets. If that does not work, then the integrity of markets is severely under doubt, and that needs to be set right. And whoever plays around or fiddles around with this sanctity of the trade guarantee fund need to be punished, which is the promoters of NSEL, FTIL, whoever, everybody needs to be really taken to task that you cannot abuse the sanctity of the trade guarantee fund.
Right. So last question now. The markets are looking up, but investors have still not come back in the way they were earlier and are not as actively present. What can be fixed? I mean, is this obviously is one cause? I mean, from a perceptual point of view, if nothing more, what needs to be done?
I mean, are you talking of investors in general coming to market?
Small investors, retail investors.
Or you are talking about in commodity markets? You are talking
markets in general.
Okay, in markets in general, I think that investors have bought shares at very high prices and they are all waiting for their prices to come. Once they come, they will exit and then they will re-enter. See, retail investor is very smart, though sometimes extra smart. He is very smart. When he starts seeing gains in the market, he will come on his own. There is no need of any further regulation so far as equity, derivative and other markets.
And you're also saying therefore that the sense of safety is there.
Yeah, very
the perception
much.
of safety, despite all of this.
I mean, what we have come a very long way so far as regulation of security markets is concerned. SEBI has done a commendable job in making the markets very safe. In fact, sometimes they are overdoing things. But still, bottom line is that security market, there is near zero systemic risk so far as the systems are concerned and markets are concerned. There is a nearer. What happens to performance of a stock, performance of an industry, that is the risk you take. But so far as systemic risk in security markets is concerned, I would say markets are very, very safe and there is no, I mean, you cannot get a better place, to get your investments safely and securely transacted. So this is, I would say, we have reached where we needed to be so far as security markets
fairly
goes.
utopian point. Anyway, right, Deena, we've run out of time. Thank you so much. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.